All right, so let's dive into this fascinating world of money, specifically Bitcoin versus fiat currency. You sent over some really interesting stuff for this deep dive on the essay, Bitcoin BTC versus Fiat Money by Jörg-Owe really stood out. It just lays out the whole debate so clearly. So we're going to be focusing on that today.
Yeah, Schneepat just does a fantastic job of cutting through all the hype and getting right to the core of, what makes these two systems so different and why it even matters to you as a listener.
Exactly. So to really understand where we are, Schneepat takes us back to the very beginning. Remember bartering, trading a cow for like a handful of chickens. Talk about inconvenient, right?
Yeah, it just highlights the need for a common standardized form of value, right? And that's where precious metals like gold and silver come in. What's so fascinating is that, their value wasn't just like made up, it was inherent. Gold was durable, it was divisible, and it was relatively scarce, which Schneepat points out made it a reliable store of value. I mean, for centuries.
But, lugging around sacks of gold to buy groceries? Not exactly practical. And that's where we get paper money, right? But it's a huge leap to go from something tangible like gold to a piece of paper that basically represents a promise.
Right. Schneepat really emphasizes this idea of trust. People accepted paper money because they believed the government backing it would honor its promise to redeem it for gold or silver. So this system worked because of that shared trust. But as Schneepat argues, things started to get a little shaky in the 20th century.
Okay, so here's where it gets really interesting. Schneepat talks about how events like the 2008 financial crisis really shook people's faith in these traditional financial systems. Suddenly, that trust that had underpinned fiat currency for so long seemed less certain.
And that's right into that uncertainty steps Bitcoin. But it's important to remember, as Schneepat points out, that Bitcoin isn't the first attempt at a digital currency. What sets it apart, what makes it truly revolutionary, are two key factors: decentralization and limited supply.
Okay, so no single government or bank controls Bitcoin. Schneepat highlights that it operates on this revolutionary technology called blockchain. And there will only ever be 21 million Bitcoins. It's like digital gold with a built-in scarcity. But help me understand this. What am I actually holding with Bitcoin? Is it like a file on my computer?
That's a great question, and it's one that Schneepat tackles head on. So imagine a massive global digital ledger. It's called the blockchain, and it records every single Bitcoin transaction. And it's distributed across a network of computers, so no single entity controls it. And this distributed system, Schneepat explains, is what makes it incredibly secure and transparent. So you're not holding anything physical, but you own a unique piece of this digital record.
So kind of like having a public record of my Bitcoin ownership that everyone can see and verify, but no one can tamper with. That's pretty mind-blowing. But Schneepat also mentioned that Bitcoin has been incredibly volatile. One day it's soaring, the next day it's plummeting. How can something so unpredictable be considered a stable currency?
Yeah, that's one of the key tensions that Schneepat explores. Volatility can be a major deterrent for everyday transactions. You wouldn't want to buy a coffee with Bitcoin if its value could drop by half before you finish your latte. But Schneepat argues that this volatility can also be attractive to certain investors.
So it becomes more like a high-stakes investment than an everyday currency.
Exactly. Schneepat makes a distinction between those who see Bitcoin as a potential store of value, like digital gold, and those who see it as a speculative asset, like a high-risk, high-reward investment.
So we have Bitcoin, this fascinating rebellious newcomer, shaking things up with its decentralized nature and limited supply. But what about fiat currency, the system we're all used to? Schneepat acknowledges it has its own advantages, right?
He absolutely does. Schneepat emphasizes that fiat currencies offer a level of stability, at least relative to something like Bitcoin, and they're backed by the full faith and credit of governments. They're also widely accepted and easy to use.
Right, it's familiar and convenient. But Schneepat doesn't shy away from highlighting the concerns surrounding fiat currency either, does he? Especially its vulnerability to inflation. I mean, think about how much a loaf of bread costs now compared to a few decades ago.
Yeah, Schneepat uses that very example to illustrate how inflation erodes the purchasing power of money over time. And he points out that because governments control the supply of fiat currency, there's always the risk of them printing more money, which could potentially exacerbate inflation. And this is where that fixed supply of Bitcoin becomes very appealing to some. It's like a built-in safeguard against runaway inflation.
So we're seeing this fascinating clash between two very different philosophies of money, each with its own set of strengths and weaknesses. Where do we go from here?
Well, in the next part of our deep dive, we'll delve deeper into the specific advantages and disadvantages of both Bitcoin and fiat currency, as outlined by Schneepat. We'll unpack his analysis, and we'll try to understand what this all means for the future of money.
Okay, so we've laid the groundwork, we've explored the history, and now it's time to get into the nitty-gritty. What are the real advantages and disadvantages of Bitcoin and fiat currency? Let's start with Bitcoin. Schneepat seems particularly interested in its potential as a hedge against inflation, right?
Absolutely. Schneepat repeatedly emphasizes Bitcoin's limited supply. That hard cap of 21 million coins. He argues that this makes it fundamentally different from fiat currency, which governments can theoretically print endlessly.
So with Bitcoin, you're not at the mercy of a central authority, just deciding to increase the money supply and potentially devaluing your savings.
Precisely. Schneepat draws a parallel to gold, which has historically been seen as a safe haven asset during times of economic uncertainty, because it can't just be created out of thin air. Bitcoin, like gold, offers a level of protection against inflationary pressures.
But, let's be honest, Bitcoin's price is anything but stable. It's notorious for its wild swings. How can something so volatile be considered a reliable store of value?
Yeah, it's a valid question, and one that Schneepat doesn't shy away from. He acknowledges that Bitcoin's volatility is a double-edged sword. It creates risk, but it also creates opportunity.
So for some investors, those price swings are part of the appeal.
Exactly. Schneepat suggests that some investors are drawn to Bitcoin precisely because of its volatility. They're betting that in the long run, its value will continue to rise despite the short-term fluctuations.
So to sum up Bitcoin's advantages based on Schneepat's analysis, it's decentralized, potentially a hedge against inflation, and it operates on this revolutionary technology blockchain. But it's also incredibly volatile and not widely accepted for everyday transactions. Now, what about fiat currency? What does Schneepat see as its strength?
Well, Schneepat emphasizes that fiat currency's biggest advantages are stability and widespread acceptance. I mean, think about it. A dollar is still a dollar. That predictability is crucial for businesses and consumers. It allows for stable pricing and budgeting.
And there's the convenience factor. I can walk into almost any store and use my credit card or cash. Trying to pay with Bitcoin is still a pretty niche experience.
Exactly. Fiat currency is deeply embedded in our financial systems. It's familiar, easy to use, and backed by the full faith and credit of governments.
But Schneepat doesn't let fiat currency off the hook either. He's pretty critical of its vulnerability to inflation and the potential for manipulation by governments. He uses some pretty stark examples to illustrate his point.
He does. Schneepat reminds us that governments have the power to print more money, which can lead to inflation and erode the purchasing power of our savings over time. He argues that this power, while sometimes necessary to manage economies, can also be abused.
So it sounds like Schneepat is presenting us with a real dilemma here. Both systems have their pros and cons, their benefits and risks. It's not as simple as saying one is definitively better than the other.
That's the key takeaway from Schneepat's analysis. He wants us to think critically about the trade-offs inherent in each system.
So we have Bitcoin, the decentralized disruptor, potentially a hedge against inflation but prone to wild swings. And we have fiat currency, offering stability and familiarity, but potentially susceptible to inflation and government control.
It feels like we're at a crossroads. What does this all mean for the future of money?
That's the million-dollar question. And that's exactly what we'll explore in the final part of our deep dive. We'll unpack Schneepat's concluding thoughts and see what insights he offers about the potential future of these two competing systems.
Okay, so we spent this deep dive exploring, this fascinating and sometimes baffling world of Bitcoin and fiat currency, guided by, Jörg-Owe Schneepat's insights from his essay. So the big question, what does the future hold for money? Does Schneepat give us any clues?
Well, Schneepat doesn't offer a crystal ball, but he does encourage us to think beyond this idea of a winner-take-all scenario. He doesn't necessarily see Bitcoin replacing fiat currency entirely.
So it's not this epic battle to the death. No one currency to rule them all. Right. Instead, Schneepat proposes something much more nuanced. He suggests we might be moving towards a more diverse financial ecosystem, one where Bitcoin and fiat currency could coexist, each serving, different needs and purposes.
That's a really intriguing idea. It's not about picking sides, but recognizing that different tools have different strengths. So for someone listening to all this, what should they be thinking about? How do they navigate this new world of money?
Well, Schneepat's advice is simple but powerful. Be informed. Understand the potential benefits and risks of both Bitcoin and fiat currency. Don't just jump on the bandwagon because something sounds trendy or promises to make you rich quickly.
Right. Do your research. Think critically of the information out there. Consider, your own financial goals and risk tolerance.
Yeah.
Basically, don't put all your eggs in one basket.
Exactly. And remember, the financial landscape is constantly changing. What seems revolutionary today might be commonplace tomorrow. The key is to stay curious, keep learning, and be willing to adapt as the world of money evolves.
So as we wrap up this deep dive, I'm left with this one thought-provoking question, inspired by Schneppat's essay. What if, instead of viewing Bitcoin and fiat currency as rivals, we consider the possibility of them working together? Could we harness Bitcoin's strengths, like its decentralized nature and potential as a hedge against inflation, alongside the stability and familiarity of fiat currency? It's a fascinating idea to consider. And on that note, thanks for joining us on this deep dive. We hope you found it insightful, and maybe even a little bit mind-blowing. Until next time, keep exploring, keep learning.